Is gold's recent price drop making you nervous? Well, while everyone's eyes are on gold, you might be missing the real story. Silver is quietly setting up what could be one of the biggest investment opportunities of 2025. We're seeing a rare divergence between these two metals, and most investors are going to misread the signals. So let's cut through the noise and break down what's actually happening and how you can prepare. All right, let's get straight to the facts. In 2025, gold had a powerful run, surging to new highs and trading in a range between roughly $3,400 and $3,700 an ounce. But lately, it's pulled back from those peaks, and that's making some people nervous. While gold's taking a breather, silver has been on an absolute tear. The gray metal has shot up, posting a stunning gain of about 43% so far this year, and even briefly touching the $42 per ounce mark, a level we haven't seen in over a decade. This brings us to one of the most important metrics in precious metals, the gold to silver ratio. This number just tells you how many ounces of silver it takes to buy 1 ounce of gold. Right now, that ratio is hovering around 85 to 1. To put that in perspective, the historical average over the last century is closer to 50 or 60 to 1. A high ratio like we're seeing today is a powerful signal. It suggests that relative to gold, silver is significantly undervalued. This divergence, gold stalling while silver surges with a historically wide ratio, isn't just a random market fluctuation. It's a signal, and we need to understand the powerful forces driving it. So what's putting the brakes on gold? As it often does, the story starts with the Federal Reserve. For months, the market was pricing in some pretty aggressive interest rate cuts from the Fed. But the central bank has remained cautious, with a modest 25 basis point cut in September, being the first since December of last year. This disappointed those hoping for a more aggressive move. This cautious stance has provided a short-term boost to the US dollar, and a stronger dollar is a classic headwind for gold because it makes the metal more expensive for foreign buyers. At the same time, a temporary easing of some geopolitical tensions has reduced the fear bid that often drives investors to the safety of gold. But here's what the mainstream narrative is missing. This pullback in gold is happening against a backdrop of absolutely massive structural support. While short-term traders react to the Fed, central banks around the world are on a historic buying spree. After adding over 1,000 tons of gold to their reserves in both 2022 and 2023, the trend appears to be continuing with ferocity into 2025. Nations like China, Poland, and Singapore are leading a global movement to diversify away from the US dollar, and gold is their asset of choice. This isn't just a trend, it's a structural shift in the global financial system. So, while the price might be taking a breather, the long-term foundation for gold has never been stronger. This is not a crash, it's a consolidation within a powerful bull market. Now, let's talk about silver, because its story is even more explosive. While gold has been wrestling with Fed policy, silver is being propelled by a different and arguably more powerful force, a massive supply and demand imbalance. You see, silver lives a double life. It is both a monetary metal and an indispensable industrial commodity, and its industrial side is on fire. Silver is a critical component in some of the world's fastest-growing technologies. We're talking about electronics, 5G networks, and electric vehicles. But the single biggest driver is the solar panel industry. Demand for silver from this sector is exploding, with some analysts warning that the solar industry alone could consume a massive portion of the world's silver reserves in the coming decades. Here's the problem. The world isn't producing enough silver to meet this demand. For years, the silver market has been in a structural deficit, and in 2025, it's projected to face its 5th consecutive year of a supply shortfall. Unlike gold, about 70% of silver is mined as a byproduct of other metals like copper and zinc. This means that even with soaring prices, miners can't just flip a switch and produce more silver. The supply is inelastic. When you have inelastic supply combined with rapidly growing demand, Economics 101 tells you that the price has only one way to go. That's the secret weapon behind silver's huge 2025 surge. Before we get into my specific predictions and strategies, I want to hear from you. Based on what you're seeing, what's your gut feeling? Let me know in the comments below. Are you more bullish on gold or silver for the rest of 2025? Now, let's look at what comes next. So, what's next? Let's break down some realistic scenarios backed by what major financial institutions are forecasting. For gold, the path forward hinges on the Federal Reserve. If the Fed continues its cautious approach and the dollar remains strong, gold could consolidate further, perhaps in the $3,600 to $3,700 range. However, the dominant view among major banks is that this is just a pause before the next major leg up. JP Morgan has a price target for gold to average $3,675 by the end of 2025, climbing towards $4,000 by mid-2026. Deutsche Bank has also called for $4,000 gold in 2026, citing unstoppable central bank demand and a weakening dollar. The moment the Fed signals more definitive and deeper rate cuts, gold is expected to launch. Now for silver. It has already shocked analysts by blowing past 2025 price targets from firms like JP Morgan and Citigroup months ahead of schedule. With the fundamental supply deficit worsening, the predictions are getting bolder. While many mainstream analysts are now targeting the $40–$43 range, some bullish forecasts are calling for silver to test its all-time highs near $50. More speculative voices are even looking towards $75 or $100 per ounce in the coming years. This brings us to the ratio trade. The gold to silver ratio, currently near 85:1, is a screaming signal for experienced investors. Historically, when the ratio gets this high, it's a prime opportunity to rotate out of the relatively expensive metal, gold, and into the cheap one, silver. If the ratio were to revert to its historical mean of around 60:1, an investment in silver would outperform gold by a significant margin. Okay, that's a lot of information, but what should you actually do with your money? Let's make this actionable. First, if you're already holding gold, do not panic. The recent pullback isn't a signal that the bull market is over. It's a healthy consolidation driven by short-term factors. The long-term story, driven by unprecedented central bank buying, remains incredibly bullish. View this period as a potential buying opportunity to add to your position before the next wave of Fed-driven liquidity sends prices higher. Second, if you're silver curious, the fundamental case for silver is arguably the most compelling it has been in a generation. The combination of a structural supply deficit and exploding industrial demand creates a powerful tailwind. However, silver is notoriously volatile. It's often called gold on steroids for a reason. It moves faster in both directions. Therefore, a prudent strategy is dollar cost averaging. By buying a fixed dollar amount on a regular schedule, you can build a position while smoothing out the volatility. Finally, let's talk about physical versus paper. In a world of increasing geopolitical and financial uncertainty, holding your own assets versus trusting a counterparty is more relevant than ever. ETFs offer liquidity and convenience, but holding physical bars and coins offers true security and ownership outside the financial system. For many, a hybrid approach makes sense. The core message remains: own what you hold. Do your own research and choose the path that aligns with your personal strategy for wealth preservation and growth. Here's the bottom line. The divergence between gold and silver in 2025 is sending a clear signal. Gold is consolidating under the short-term pressure of a cautious Fed, but its long-term bull market is firmly intact, backstopped by a historic wave of central bank buying. Silver, meanwhile, is breaking out, powered by an undeniable supply deficit and relentless industrial demand that cannot be ignored. The eventual pivot by the Federal Reserve toward more aggressive rate cuts will likely be the catalyst that ignites both metals. However, because of its unique and powerful fundamental story, silver has the potential to dramatically outperform gold in the next phase of this bull market. The market is giving you a signal. The question is, what will you do with it? If you got value from this breakdown, do me a favor and hit that subscribe button and turn on notifications so you don't miss my next update. And one last time, let me know in the comments. Are you buying gold, silver, or both right now? Thanks for watching.
Stack it up real high. Come here to be in the know. Come here, enjoy the show. 'Cause it's Warren's money time.